Alrighty. So yesterday, you guys were asking for homework, so I gave it to you. Um, but of course, I was looking for gap ups and gap downs and showing where that price expansion happens. And if anybody has any examples of something they saw today, there's a lot of things that did rip. Feel free to drop that in the chat. I think there was a couple. You'll have to forgive me today too. For some reason, I'm feeling like I'm moving in slow motion right now. My sinus pressure is starting to kick in. I know what time it is. I'm gonna go steam after this shit. But so if I'm a little bit of a uh, little spacey here, forgive me. Yeah, perfect. Yeah, me too. Get the boom boom sticks. Yeah, dude, I'm out. I have to get some more. Um, but anyway, talking about gap ups and gap downs. So let's take a look at. There we go. Let's see. No, I'm not kidding, man. I went outside and used a blower because I was weed whacking her at lunch. I was trying to clean it up. I think I stirred up some trouble for my sinus cavities. Let's see. Homework. Where the fuck is the homework channel? Is it in a thread? I get lost with these threads. They scare me. Hold on. Ivy, where is it at? Or Alex, do you know where it's at? Is it that? There it is. Okay. All right. So let's see. Yesterday at 8:56. Try to find an example of powder price exploding off of the gap up. So let's take a look at zero cool. So I think this is an example of more or less gapping up to and then going to resistance. So now this is not a box from what I can tell. So, but you do have a gap and go. That is correct. I don't have enough data to really see that. That's a gap down, dump, and then reverse. So again, that's more of a bounce off of support rather than a gap up. That's an example of something gapping up. Again, I don't have, when you zoom in that far, I don't really have any context for what's actually going on. But I would assume you gapped up, hit something, couldn't grab it, and pulled back and retested and built. So I think that right there, where you gap underneath the floor, right? Those are two down days. Um, but yeah, that one could definitely do a little bit better at identifying that. But again, I gave you guys this homework because you asked for it. I mean, if you gap up above something, you need to know before it, not after. Okay, so this must be channels or something. La Boo Boo gapped up above previous red candle closed. Yeah, and another thing that you'll notice here is look at the control, right? Kind of across the board here. You're seeing, there we go. You're seeing a gap up over that, right? And inside of the wick. So that's definitely a good example. And I think closing right at that candle there, basically puts you outside. So I think you would have seen that candle if had you opened up above here, but you had to work through that resistance, and that's a good example of that. That's, you didn't necessarily gap outside of the whole block, but you did gap out outside of what was controlling you on a lower time frame clearly. So um wait, can you see my, okay, yeah, you can see my cursor. Just want to make sure. All right. So that's not what I'm talking about necessarily, right? You did gap up, right? And this is probably one of those. I think this was when you had news, but because if I'm not mistaken, this happened closer towards the end of the day. Again, don't know that, but that's not. I'm talking about a gap up outside of the control of those candles as an example of something where you don't even don't necessarily come back. So let's see. That's a good example. Yeah, this is good. So I could zoom in on all of it, but not this one. So yes, you do inside of the 1 2 1 2, you do gap up over the 50% mark. So you go to resistance. That's a perfect example of what I was talking about. Great job. All right. Meta. Beautiful. That's what I mean. You gap up outside of the box. That's a gap and go scenario. A lot of the times at all time highs that can happen as well. Because it just becomes a buy. Sellers are, unless an institution steps in, like sellers are a little bit weary. Would you short a big gas grid? Well, some people will, but the momentum is up, and when you have nothing to stop you, a lot of the times it's open space. So Labubu, obviously you get it. I think that's the most important thing we're deriving out of this. So that would be more of a bake out. Yeah, yeah. I wish ARM would gap up. Big facts. Where did there you are? All right. Blue. So this is, yeah, you do. I think you're missing a box right here, right? So you actually kind of missed one. Well, maybe I don't know. Yeah, all you have it on here is levels, but there's a box there. So you gap up above that cost basis. You're able to go and break out and hit that next resistance. Look at what happens when you don't have any green floors or red big candle, right? Moving through that empty space. That's what we like to capture. And when we hit resistance, this is typically when we stay away from those weeklies. No weeklies. Um, but you do have a box or structure down here as well. You gap up above it, you hit your next resistance, or basically right around the floor and cost basis of that box. Next day, because you are above all of that tension, you gap up. Pretty good. I don't know what that is, but that's definitely, see. I guess that's where you gap up and hit a resistance, but I'm not sure what you're trying to highlight exactly. So, yeah, there you go. So these don't look like gap ups, but that's definitely a gap up, right? And you're well above cost basis. Now, thankfully, you're able to go and reclaim that floor. And then the next day, you see that expansion candle. And then the final day, you touch that candle there. And again, sideways. It's one pattern that I keep pointing out on purpose because I want you guys to see, like, okay, if this is the 24-hour and you catch a fire trade on Dell, a lot of people, like, once they put the lollipop in their mouth, that's it. You can't get it out. Like, they're stuck on that shit. And then with trading, especially the way that we can make a lot of money from a little bit of money, you're an opportunist, which means that you're capturing your pockets of empty space because you can ignore, like, there's always a question within us, like, can it keep going, and it's those few times that it does happen that convinces people. But anyway, I know that's off the lesson. I just like to repeat myself on that. I misunderstood the homework. That's okay. It's not uber important. Do you want me to skip it? Skibbity? Yeah. I mean, good channel like that. Expand it. Good Good channel identification. Yeah, good channel identification for sure. Yeah, good channel identification. Again, probably an expanded thing, but J Dub said he don't understand the assignment either. That's okay. You are doing quite well at spotting floors and resistances, though, points of contact. Um, but yeah, it's all good, guys. J. Okay. Um, Not really seeing. I'm not sure what you're pointing out here. I don't have any context as well. Just see arrows. So there's an example of gapping up above, a box, but I would have shrunk that box down here, which would have made that probably cost basis, and then that your next high. But that's all right. A couple of you might have misunderstood a little bit, but that's okay. What is this? IWM? Yeah, there's an example of a good cost basis open, especially when you see all that resistance over there. So good push outside of that candle, like that. Uh, there you go. So gap up on cost basis, pop up, you hit resistance because technically you're still in a box, right? Go sideways for a little bit, finally hit that tension max. You can see each candle gets tighter, 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 and then big explosion. All right, Lori. Let's see. There it is. Hey, you guys need to send your charts to Lori. No, I'm just kidding. Yeah, you're gapping up above resistance, little pocket of empty space right there. You try and fill it, you struggle, you go sideways, right? Sideways, pop, sideways. Um, so yeah, good job. There you go. Good gap and go, right? You even come back, pop. I think that's earnings, but it's still expansion. There's a gap up over resistance there. Actually, it was a gap down, excuse me, for a retest. Hmm. Not exactly sure what you're highlighting here. I see gaps. I see where you gap down and go and hit your support, but not seeing exactly what you're highlighting here. I mean, maybe, yeah, I guess it would be that gap down, gap up to resistance, but yeah, I can't see to my left, but assuming that you gap down underneath, you did lose your floor on a good signal here, but I'd have to see what's going on over there. All right. I appreciate it. I know, if you guys turn it, I was giving you guys a hard time yesterday uh, about turning, if you guys, I know a lot of you guys we're grown ass adults and we got shit to do. So if you guys get it done, you know, it's appreciated. That's a good gap down, right? Gap down into nothing. You actually close underneath a floor, gap down and flush. Again, with this, guys, I can't really see exactly what you're gapping up above, and that's what I want to see, right? Is like a gap up outside of something, right? Or under something. So those are gaps for sure. Gap and goes for sure. But there you go. So box, gap up outside of that box, and you see a good rip. Now I don't know what's to my left, but I'm assuming it's probably possibly empty. So all right. Yeah. So wall there, wall here, you gap up and you hit resistance. Perfect. Then you start the grind. Again, proof. Do you guys see this? We're opportunists. Now, again, I don't know how much of a signal Home Depot was giving there, and it is a difficult stock. There's some stocks that are just tougher, and this is HD seems like it's one that some I've seen it in some clarity and but like down here, I feel like I'd be a mess. It's just so messy. That's the kind of stocks that I think maybe some might call me lazy now, but it's like the ones that are clean, those are the ones that make me the most money. Those are the ones that I feel the best holding through. Those are the ones that make the moves most of the time, right at the open overnight, um, Schwab and all those other ones, they present a really clean setup. So when I look at HD and then I, look at what Schwab, just for an example, because we haven't gone over this, but we look at, which, ooh, damn, what a punchback. Um, this is everything, box, clean box, good punchback. That's a good example of gapping out now. And this, you do come back down, you retest the 75.20. That probably presented people with a pretty good buying opportunity, and then you bounced and you moved up to resistance, which resistance was the top of these two red candles right there. Then you gap up above that. What's above you? Just the floor. You tap off that top and you go up into that empty space. You fill up every single little bit of empty space. Look, just filled. So pretty cool. All right, that's pretty much everything. Good, definitely. Again, I think with most of you, knock out 20 or 25 charts a day. Yeah, I don't know how fast you guys chart, gauge your own performance, but go through. One of my favorite things to do if you're feeling like, and this isn't necessarily a watch list, but this just kind of can help, is you can go through trending coin or trending shit where it's like PayPal, or you can go through those and you can chart them. I personally thought so. One of the best exercises for those who want to know, one of the best exercises and I think this really did put me ahead of the game, is I would go through the earnings and I would chart the earnings that were coming up. And I'll tell you why I did that. When you chart earnings, right? The move that's likely going to happen is going to happen quickly. So you're going to know whether you are right or wrong very quickly. And this is a great learning opportunity. Sometimes can present and it's also a good opportunity to look at how, like, okay, that's a shitty, CMC. That's probably a hot dog water doo doo stock. It's a hot dog dude actually, there's some clarity in there, but for the most part, that's not my favorite setup. Although over the top there, likely one day it'll go back up and fill that. But that's what I would do, is I would go and I would find the shitty ones, go write those down. Um, BlackBerry, Carnival, I would do. And the cool thing about this, and you could say Earnings Whisper does this too, but if you do it volume based, right, where you have top down volume, you can find the ones that have the most volume and just fuck off with the rest, right? You don't need to do that. But when you go with a volume based one, that's where, um, yeah, McCormick. I don't think I've ever traded, or I don't even know what that is. Accolade, but you could go through. It's a really good exercise. Question. I notice sometimes you see certain news that helps you decide we are crashing. What do you mean? Um, I've yet to catch a move like that. That play could make your whole year. Yes. Are you talking about on Schwab? Yeah. So, and I think like the what I shouldn't be doing is talking about how much, or when I speculate as much. But, again, that's not my responsibility. I think that in the face of the thing that tempts you is when you're best, it gives you the best opportunity to deal with that temptation. Um, and to find some resolve or patience or whatever you need to do to overcome that. But it's these type of setups, you know. I still, I mean, dude, I still remember, Mara because of how, I mean, dude, it was like shocking how much, you could have, how little you could have put into this and how much you could have made. And it was, this is one of the examples, especially those of you guys who are new in here. I use this example a lot because it just shows how mechanical, um, it just shows my strategy. Like this is literally a one of the most perfect plays I've ever taken. Um, and that was a, box, perfect top, perfect bottom, pop down. Cost basis doesn't respond. You don't see a continuation at the downside. Next day, sit. Again, we're looking at that empty space. You also, shit, you had a funky ass box right underneath you that had a weird gap down. But um, regardless, you come back, you retest, right? Yeah, you get 1, 2, 3. The candle closes on the floor. The next day, you open up, you retest, yes, the previous day's high. You did end up that morning tapping off of and coming back retesting, and then, dude, you exploded. And I remember the whole day. Well, I don't remember the actual whole. I remember taking it, but the gap up the next day, I was coming out of surgery. I had just had implants done for my back teeth, and I was on whatever the fuck they give you, and I got on live. I don't remember what I said, but I was coherent enough to roll Mara out for the next week because I knew that we had a chance by holding that box. The fact that we held onto that box. Next day, we tapped that floor and exploded right up to the roof. Almost got out the next day, but I think on that first day we ended up trimming. But it was a huge bag, man. And Tesla is one that, listen, Tesla, Snow, like some of these names lie in wait. Tesla is again, company wise, fuck it, but like movement wise, you could make if you were strategic, and I'm not trying to hype you guys up, but in a way it's like this is true because I've seen it done. People spend every single day searching for an opportunity. It's like living inside of a casino, right? And there's a lot of people who struggle with that because it's like it's almost like knowing a resource is right on the other side, you know, of that wall or whatever. But ultimately, the majority of the people who show up every day, right? Because they fear missing out. Not because they see a great strategy or a great setup, but because they are fearful that they're going to miss out on some monumental move. And this is why, like, yes, be motivated and driven to learn this strategy and to be successful, but also cool your jets because it having being the cooler I've gotten, in terms of like just I try not to make a big deal out of or I don't know how to describe it. Like I don't feel the emotional turmoil, right? Because it's like I have not easily, but have cut out like distractions. And some people take this as an offense. I've had a lot of people on TikTok, especially, come in and be like, yo, you told me you didn't like this and it ripped. It happened today. You know, I think it was like OX something, or some bullshit like that. That is not something that looked good to me. Not that it isn't empty space or isn't consolidation and you can't take that move off the top. That's not, but what I have made money on, right, is opportunities that are clear, right? I still remember trading this. You can go find, there's a YouTube video on it somewhere. This was actually a two, if you go to the 4 hour, it's really, really dope. We had perfect, I mean, just everything was perfect. Everything was perfect on this setup. And it ended up being one of those setups that we talked about. And if you go watch some of the previous classes, I believe I talked about them. But we talked about I mean, there's a gap up on the floor. We talked about the fact that going into a bull market, right, seeing a nice downtrend, well controlled. I mean, this is perfect, right? Box here, box underneath. You ended up coming back and retesting twice. On the 4 hour, it looks really, really good. You have empty space here, right? That punchback should lead you to resistance. Resistance is also in confluence with this floor, right? Because that was the original floor. So reclaiming that should promise us cost basis, right? Which is a 24-hour cost basis. But then we saw something that made us look at rolling. A lot of people rolled their contracts out. I remember Astro, I don't know if he's in here, but I remember Astro made like 25 bands off of like $1,000. Now, what he did after that, I don't want to talk about it, but hanging on to is the hardest part. But we talked about the fact that there was and this is we're not there yet, right? We're at the highs. Some of you guys haven't felt this yet, but this was a different, the market had been dumping. Elon bought Twitter. Shit was crashing, shit, we played it. We did the same thing down here. Same thing. But this was one of those opportunities where you were rolling volume, right? Cost basis that promises me a new high, right? I have empty space all the way up to 265 and some of that empty space all the way up here, right? Through a little tiny punchback on a lower time frame, but more or less, and if you go to the 24-hour, it cuts that out, but more or less cost basis. So that promises me a new high. That is the new high, which also promises me a new high. And then what's above me to stop me? Ask price. Now, we're not there yet, right? We might have that opportunity down, hopefully. But that's something that we might be there in a year. And at this point, you could have thrown shit at the wall and made money with Tesla. But it's not something that isn't reoccurring, right? Tesla still performs maybe just as well, right? With the way that it moves. But what can we go and see? And I'm repeating this, and I think I've almost repeated it every class. The number one issue is people with people trading is they are unable to stop themselves from trading every single day. It's the new people who come into this, and especially the new people who like, you're the first person I saw. Like, those people don't have those issues most of the time because they didn't participate in day trading. Dude, it was funny because somebody said I had future withdrawal or like prop firm withdrawal or some shit. But like, after all of that euphoria, making all that money really fast and like all that, and like, dude, I felt, I felt like I had like straight up withdrawals or like I was drained. But not to mention, I realized and was shown quickly how quick you can lose all of it. I was at 9,000, which was over 4,500, and I tried to lose it. Ended up making more. And then so finally I took I flipped my brain, which when the fuck do I need to be able to do that, right? When do I need to lose money on purpose? So I had to activate some dumbass part of my brain where I had to like try to take the opposite of everything that I would take. And then I ended up losing more than the 4,500. And I was down to like 3,200 and then had to, so that's fucking crazy, man. And I get, if you're young, some of these younger cats, like they have maybe the mental energy, to deal with that shit. But I guess I'm just old or maybe I'm just normal. But like that shit is super draining. But the fact of the matter is if 98% of these motherfuckers are losing, and we're looking at the chart and seeing the opportunity to just wait, be patient, look, because the thing that we can go and look at is that even, yeah, there's some gap ups on, just looking at Tesla in particular. A lot of these moves start the way that most normal moves do: a candle close outside of the box, a candle close outside of the box, right? A candle close up against the floor, right? These are but nobody wants to wait for that. They want to try to get in prematurely. They want to, buy or average down because it bounced off of something on the 5 minute. It takes days. And just what I've learned, is through swing trading is that the more proficient you are in your strategy, the more you should see your own bad behavior. Because when you look at how we observe the market, it is a breathe in, breathe out, contraction, expansion, waves, however you want to metaphorically look at it. There's a period in which you cannot, and there's a period in which you can. And and especially after this event, like I'm leaving some opportunities on the floor. Like I'm not going after some of these like more like I took the cues short yesterday because it did exactly what I love to see, which is 3 taps off the top and only 2 taps off the bottom, an empty space underneath you, and that was an easy, quick little band. But other than that, if it doesn't fit the script, I want to be able to make more than all these gurus do, or anybody. It just period. I want to be able to make more than what a day trader does, struggling for a month, if he can make anything at all, in one day or in 3 days. And we have, you have the evidence to support that hypothesis, right? At this point it's a conclusion, but like you have enough evidence. You see the percentages that people are making, and yes, some of them are not going to work, and that's okay. Because this one thing that TTI, and I kind of wish I could have gotten him in here for this class, but like he's really big on risk management and about like or not even risk management, but risk to reward. You don't have to put that much down to make a lot. And especially those of you who want to make money, you're trying to make cash, you're trying to make money because you want to be able to build your account, or fuck, you got life issues going on, or you're tired of struggling. Like the market doesn't give a shit how bad you're struggling. In fact, I'm pretty sure that it wants you to struggle more. Make sure the share value goes up. So if you are trying to take a small amount of money, or you're new, dude, you can take $50 or $100 and just keep training with that $100, and you have to make a laws or commandments that you have to follow. I only swing. I only take trades at the end of the day, and I take profit if in the morning when my target has been hit. That's a period, right? And you need to be making money first before you can start speculating. What would be some of the rules for someone in that situation? Swing only, overnight, 24-hour setups only, weekly or 24-hour setups only, shorter expiration contracts only in empty space, 1 week out for any higher time frame moves, target-based contracts. If you have $100, contracts should not be over, I'd say $10. $10 to $15 is at most what you want to be spending per contract. You want to be able to buy 3 or 4 of those, trim at your first target, trim 2 at your second, and let the rest and then look at what's above and what's below. How does that last one fall? Because you're going to be using that same thing when you get better, or when you grow your account. But you have to look at where you're at in your journey and be real with yourself. Right now, you cannot afford to speculate. And does that mean you're going to miss out? Yes, accept it now. It sucks, but you got to accept it. There's so many things in life that are that way. We just don't want to accept them. But the sooner that we do, we can make peace with it and move on and find our way to succeed. I mean, that's something that life has taught me, not just trading. So those of you who are trying to get your shit together, right? Less is more. Less is more. And it's not going to be like here's the one thing that I've learned about my own brain, like and about being an educator, is like when you get rewarded for bad behavior, when you do take a day trade when you know you're not supposed to, like maybe this time it works. Maybe you haven't done it in a couple months and it works, you make a bag, right? Unless you have the mental fortitude to be like, all right, that was a I got in with some like $5 contracts, got 500 out of it or something crazy like that. Like I'm gonna sit back and study that opportunity. Why did I take that? Fucking print it out, put it on your wall, whatever you got to do. And if you had the mental fortitude to be able to say, I'm not doing that again unless I see that exact same thing. Most of us don't, right? Or most of us need to stick to the path, because when you get rewarded and then you decide to do it again and you did it inside of a range, all of a sudden, listen, it was so crazy when I did this prop firm thing. I had to it was like I had to go through everything I teach you guys in like 2 days. Like it was like I had to remember all, like hyper fixate, like on, because everything is happening so fast, which is why I don't recommend it. So what is the reality here? The reality is that you're going to have to wait and we did this experiment to show you. But the fact of the matter is that you could take $100 and it could be 3 grand or 2 grand, and we've seen it happen. It's not an anomaly. It's a part of what we do. So going through and measuring, doing your due diligence, looking at how long that stock stays inside of a certain time frame, right? Or inside of a certain range. Not just the time frame, but also, okay, where are we inside of this box? Is that giving me a signal? No. Is that giving me a signal? No. Would you probably speculate on that big ass green candle with the wick underneath it closing up against cost basis? Probably. But the next candle opens up flat and red. Flat and red. Not a single candle close at the end of the day is outside of it, right? And even if you did decide to take this, right? I would have wanted, especially if you're in a small account, sure, if you're in a large account, you can do what you want. But with a smaller account, I need to see a candle making its way outside of that previous top. Or intraday, more than likely looking for an opportunity in a box, right? And this doesn't really present that. In fact, I would say that not a single, yeah, so go look to the downside. Watch this. So if you were deciding or wanted to decide that during, that day, I want to take Tesla up. Well, there's your 4-hour box on a lower time frame that would have signaled that you could go higher. And that's 425.25. I do not use percentage-based stop losses. No. All right. Um, I know I keep repeating the same lesson, guys, but it's I just want you guys to understand how, I mean, in my from my perspective, you see, you went through it yourself. You see it, you see that same thing in other people, uh, and you know that it's a painful realization, right? That you went through. I don't want other people to have to go through that. Some of us do, right? Some of us have to keep banging up our head. There's some, that's a personality thing. That might be me too. But if you can take that advice or what I'm telling you now, and tomorrow when you or Friday when you go to check on your swing trades, and you know you're opening up in range and nothing happens, you look at that opening candle and you say, what, where is the setup, right? Argue with yourself. If you really show up, what am I trading and why? Because I, every day when I show up, it's like, well, if this could break that, you're opening up in range. There's a good chance, yeah, after a certain day, a certain amount of time, like, yeah, maybe it's time to step to the table and watch that setup. But if you're, I mean, I just fucking today, right? It's you're opening up. It's almost the way I think about it sometimes is like when you open up in range, it's like you have a bully behind you and a bully in front of you, and you're just about to get your ass beat from both sides. Pause. But like it's not going to be pretty. And today was no different. Today sucked because I straight up was like, fuck, man. Not even an overnight gap anywhere. We opened up in range. But I can promise you this. You quote me on this. Don't tell your lawyer I said promise, but when this does break down or open up or close against, you will see one of these kind of candles. One of these or one of those. That is what we're going to see. And you're either going to wait for it, right? Or and there's going to be some opportunities, man. I tell you what, there's sometimes, and I know that it sucks, where it's like you kind of can see the potential there, and maybe some of you can speculate, and that's okay. But a lot of the times you're going to sit on the sideline because it didn't trigger, it didn't look good, you know, uh, and maybe some crazy ass news comes over. Again, we can't just show up or expect to be able to catch those. Again, you'll see people make money off of speculating on those things, and that's not you yet. You will be able to do that. That is what you're working for, is the ability to be able to diversify your cash. And it could just be one or two trades away. One or two solid trades away, not 15 or 25 day trades away, not 100-day trades away. I'm talking about, in reality, a 24-hour weekly setup could trigger, and you could do what most people struggle to do in months in a couple of in two trades. I saw a couple of people today. One thing that I see is some people are pussyfooting around with entries, or especially with the really low risk contracts. They're buying like five, and they're like $6, and they're operating a $10,000 account, and it's like, you got to 10 contracts is where the real money starts to flow. 20 contracts is where it's going to make your ass twitch. you know 50 contracts, and I don't care who you are, your heart's racing. But anyway, I'm gonna stop ranting now. um there's levels, right? Be okay with the level you're on, accept it for what it is. Look to get really good at what you're doing right now, right? The money will come, and it's so hard to do, and I empathize with those of you who are struggling to do it. It's still a living practice, right? It's not just a goal that you accomplish, it's a daily practice. And it starts with repetition. That's it. I am not going to trade lower time frame setups. I will only take swings at the end of the day. 50 contracts, start calling 911. You're damn right, Fabian. Or am I saying that right? Fat Fabian? Or I like that name. but you know what I mean. All right. Um, cool. So I think we'll resume our lesson here, and I want you guys, if you've been written down any questions about any of the technical analysis that we've gone over so far, we're gonna circle back to some of this stuff when we put it all together, but we're gonna start moving into option contracts, right? And like again, we'll talk about uh, target-based contracts and the Greeks and stuff like that. So, all right. So again, with last time we were talking about gap up, gap down, where you're close to. I hope this is again a tool. I was hoping to go through because yeah, that's where I was going with the original lesson. Uh, was a gap up, and somebody in here traded something that had a pretty nasty gap up today. Does anybody remember what that was? I'm trying to remember. There was a couple names that really ripped. Was it Marvel? There you go. Yeah, that's right. Marvel. That was a thank you. I appreciate it. That was a beautiful example, right? Marvel gapped up on top, right? So look at how, and especially those of you who you see it's getting to that, because Marvel seems like it's pretty consistent with its time frame, right? Let's go ahead and fucking date rate, or have that on there, dork. Let's just do this really quick. I just want to do a little experiment. So that's 10 bars. It's pretty damn consistent. But today's price action, right? And the cool thing is even if you didn't necessarily, like maybe you didn't enter a full position. If I'm not mistaken, this actually did end up ripping over that 73. So that was something you could have taken advantage of. But the cool thing here is that every single candle on Marvel, right? Even this one did not open above cost basis. It opened in the range, it took off, it hit a major resistance, and they gave it the business again. But what did they accomplish? These are two questions you want to ask yourself when you're looking at a candle. What did they accomplish? As a seller, your job is to push price lower, to push or pass the baton, i.e., here, right? So that price could not, or exactly, it could not floor it. And that's probably true when I move down into this lower time frame. At what point did Marvel, and look at how much they push. 1, 2, 3, 4, 5, really pushing. 6, and look what you're trying to push them under. You're trying to fucking pass that baton. And when you do, you fight over it. And that's a lot. And then look at does everybody understand what the in my head it makes a whole lot of sense, right? It's literally like a spring. It's like that you're pushing it down, you're pushing it down, you're pushing it down. You gap up above where everybody closed price. Look at that. You gap up above where everybody pushed price, which was at cost basis, and you open up and you push right off them. Fly through the wick, and that's what it looks like. It's exactly right. That is what it looks like when you when you fry sellers. And if you can see that a lot of the times on the chart, that coiling up. A lot of the times sellers will do it on purpose. This is a good example of that right here. You'll build a box, you'll have resistance up above you. Wow. Yeah, that's been a resistance. You'll have a resistance up above you. Funny enough, that's not a box, but I will, if I see a green candle, I'll typically highlight its range. Okay, I'll repeat that again. If I am, and this is what I mean by the first green candle to your left, right? Without a box, it is likely, this is 100% probably a box if I go down. Yeah, lower time frame, you can start to see the box, right? So I'll measure that out. But what they'll do is where a lot of volume was pushed in, this was actually on earnings. You'll gap up and that'll give sellers, right? So when you gap up and this is actually something to keep in mind. When you gap up and you don't retest, right? You do retest just the top, but you don't actually come back down and fill your gap or anything like that. So when you start to see price move up, it hits that wall, and then you spend, it looks like you tap the floor 1, 2, 3 times, candle close underneath it. You don't have a whole lot to hold you, but what this does is it allows sellers to get a better average, the big money. And what they do is they use that liquidation of basically the smaller fish. Sellers eat sellers. I mean, they don't give a shit. They're just trying to get the best price. That's what everybody's trying to do, the best price. If something is really going to rip, it's going to retest, even if it's momentary, it'll retest to fill those orders. Yeah, but Hank, and this is something that like that's a punchback. It's got, but a lot of the times, this is why I've come to the conclusion, knowing what I know about the market, knowing that institutions like BlackRock, who have their pockets or their hands in every major corporation's pocket and have voting. I mean, UNH, after the CEO was killed, they tried to sue. Hopefully, I looked up the sources, but again, it's the internet. BlackRock tried to sue the UNH for offering too good of deals. So like they have rights to move money. Now, what do corporations do to make sure that they can get away with what they need to get away with? Right? They put their money in their hands in the pockets of politicians. This is connecting that money, right? But not only that, we know that those institutions, they got people in the know. There's people in the White House. You don't think that BlackRock, I guarantee you there's somebody working in BlackRock right now, or who ex BlackRock who is in the White House. I'm pretty sure there is a couple of like ex CEOs or finance, but those people have the news. We're not you don't think that like maybe you wouldn't, because you're maybe hopefully a good person, don't want to break the law, but if you got caught, you might get a slap on the wrist. I mean, Trevor Milton got fucking bailed out after making billions, off of some fake trucks. So we not only do we know, there was a story about it that we read maybe almost a year ago, but they were talking about how institutions even have their own service that you can't purchase. It's probably like $500,000 a month or something crazy. But it's basically the news before the news. It's the talk. And again, these people are all connected. Nancy Pelosi, all of these people, like the more connected you are in there, the closer you are to the money, the richer you can get. And they know that. And that's why politicians should not be able to invest in the stock market, or not invest, but they should not be able to trade. And they definitely shouldn't sit on the boards or have husbands that sit on the boards of chip companies, so that way they know when major decisions are going to be made. Because if I did that, that's 10 years in the feds minimum to the door. So I have come to the conclusion that it is all in the chart. That's why I stopped. And there's some things that like, I didn't see it coming, but there was empty space and it filled up all of that empty space. So the analysis stays true. The same thing with earnings. I feel the same way about earnings. The move is encoded. If I can see it, I'm likely going to take it if it's good, right? If the risk to reward fits the script. Some things don't. But I've hit incredible earnings plays because the setup was clear. The same setup I would take on any other day, probably with a longer expiration. I'll take with a shorter expiration, cheap out of the money. I know that they know. And so if they know, I know that the chart is moving in a manner that favors that outcome. And so the chart is typically set up for that move. I distinctly remember one of the first times that this happened, but I remember looking at Meta, like when I connected this dot. But I remember looking at Meta and the way that it had empty space underneath it, the trend, it was just sitting sideways, the market was moving. Um, and it wasn't, it was just, I mean, I'm talking about like robotic candles shrunk down. And then it kept like doing this weird wicking shit. And I said, yo, there is no way that this thing is not going to have news. Within 5 minutes of me, I was in the short. Within 5 minutes of me saying that, a rumor news comes out about Meta. I got out because I think I hit like 400 or 500%. I got out. I expected that to take a day. It took 10 minutes. Immediately, right? Buy the rumor, sell the news. Well, this was in reverse because the news was that that wasn't true. And that empty space immediately got filled right back up, but it bounced right off the trend line, bounced right off of the box underneath it, provided institutions with a better opportunity, slammed price down, filled orders, big boys win, small fishes get eaten. And so, like, I think about this and I think about, well, when do people, most institutions actually make a whole lot of money from selling options, right? So they love it when they give you a big move, right? Go look at fucking, Nvidia or Tesla. They love it when they can reel you in. And this is why we have to see that, right? They'll give you, even in the morning, it's so interesting. It's like a psychological thing. Even in the morning, right? They'll give you some rapid 5 minute candle just to stop and go sideways for the rest of the day because you didn't break range. But they'll give you these big moves up. Everybody's interested. Contracts are at their highs. Well, guess how institutions make a lot of their money? By selling options, which means they need the option value to disintegrate. They make money if the option contract loses value. So when we go sideways, that's when they're able to make that money. And then they typically will reel your ass in again, right? But most of people get caught in the trap. They see the big move. They're too nervous to get in. They finally gain the confidence. They get in right here. The next day, it stops them the fuck out. Then they see it popping back up. You probably are resonating with what I'm saying right now. It pops back up. You think it's good. It immediately sinks back down. You chop for days. And then you get out and you're fucked up. Your account's fucked up. Your mind is messed up. You're nervous. You've just given yourself like I mean, it's not like, war, but it's like you're really actually fucking yourself up. Like you can't go through life thinking that these things just are, just brushing them off. Like it's not how that works. We're training our brain. Our brain's designed for this, for patterns. And so the minute that you give up, the minute that you're like, fuck, it moves and the cycle continues. Oh, fuck. Well, it's not going to keep going. Damn, it's keep going. Damn, it's really dumping. Then you get in, gap up. So it's like if you can sit back, less is more, and see that cycle for what it is, understand that this is how institutions make money, and be patient, you're going to make more in a shorter amount of time than most people do struggling in that cycle. Big facts. I like the pain. All right, Mr. Master. They got clubs in LA for that, dude. I'm sure. They even have an app that got advertised to be on Reddit. It's like for Tinder, but for pain. I politely declined. There you go, AB. Proud of you. All right. Does anybody have any other examples we can go over? I feel like there was one more that gap. Was it Coin? No, Coin did not. not gap up. Data dog, weird ass algorithm. Yeah, straight up. That's a good example, right? And let's go look at the price action. Okay, so you open up, pop down, first candle closes right at cost basis. Look, that's the only place that you found any sort of major resistance. You got a small 5-minute box that's perfectly cohesive with its higher time frame one. You did, and this is true as well. Price did technically, where's 4:30, 8 a.m. It did. It gapped up above the box, built a micro box in here, whipped down in pre-market, opened the candle right on top. Look at that, right there. That's 9:30. See that candle? Crazy how the boxes line up like that. That's straight up, dude. Do what again? Draw everything again? Or the boing? Not boinging for you, dude. So, well, I mean, dude, um, this is again why it's so important in the morning, especially when you have swung something, to look at where the open is at. I think, is everybody following me with this? I feel like everybody's kind of picking up. Can you go into snow? I didn't see. I didn't take it, but what am I seeing? I'm seeing the end of tension. This at last or this afternoon, I saw this fucking candle right there. That's a fatty order right there. I'm curious, man. But let me just explain why I'm deciding to do what I'm doing. Let's count, right? Kind of characterize each one of these candles. Big pop out, big reversal. This type of candle right here will typically inspire thousands, millions to fucking try and go short. Next day you get what you want, right? You get the first part of what you want, but you don't close underneath the nearest four. You gap up, right? This, because you have so much overhead, is held down. Next day, held down. Next day, you tap that very same high, sellers get what they want again. Next day, they try to continue that trend after tapping the top of that red candle, and they finally do reach a low. That low is equal to the one that you made previously. Next day, you open up at the same low and you explode up to the top. You don't go anywhere, you don't gap up. Next day, you gap down. Think about what this is doing. Think about how much tension, how much pressure. Whoever wins this war is going to see their price target, their whatever, if it's up or it's down, we're going to see a large expansion in price, right? And I can cycle through what I'm showing you now, right? From here to here. And again, I don't have that break. Right now we're at 15 days, but it's right around. This goes past a little bit, right? But we're generally getting somewhere in this. So we're overdue, if I'm being honest with you. We're overdue for a bigger move, right? And just to highlight what I'm talking about, right? Which is everything I'm teaching you, like tension and all of it. It all, even if it pops up and retests the empty space above it, it does what it's supposed to do. But it ultimately releases that tension, and that's what we're looking for, is a release of that tension, one way or another. I would actually anticipate that the move that we make, whether it's up, because right now I have a couple of my target, and the reason why I'm in this is because of the opportunities on both sides. I could be slap wrong on one side. I'm going to make thousands if I'm right. That's a chance I'm willing to take. The floor is here at 227. The empty space, again, from what I see, for the most part, 9 times out of 10, is it all gets filled up. Not some of it, all of it. So, yeah, 227 would be a sure bet, but in the most recent price action, it would be right at 229. Now, let's say that doesn't work because we're here. I want this, right? That's what I want. If that doesn't work, that's cool. I'm cool with that. Because in the grand scheme of things, right, where we're at in this chart, if you were to wick up, hit 215, and then see a complete draw down with a red wick fat, I would absolutely assume that the finishing move, because typically you're going to whip up before you go down, or vice versa. You'll whip down before you whip up. And you've technically done that. But the move down offers the same opportunity that the one on the upside does. So this is an opportunity of something that it might be alluring, but if you're somebody who needs to make sure that you're abiding by your risk, it would be something that you would have to take because it broke its structure, right? This is something I can afford to do. I could put $1,000 on both sides, and I wouldn't like it how I felt. Well, we're getting actually kind of close to that. So, but I'm not gonna like it if it doesn't work, right? But at the end of the day, I'll be all right. It is within my risk. I typically won't risk any more than $2,500 on a trade. That's about as big as I go. How far out? I got 2 weeks. Or I got a week out and then 2 weeks out. Also got some for this week, but those went up today pretty well. But this is if I can, if this week, if it happens tomorrow or on Friday, if this happened on Friday, any portion of it, because again, the majority of the move it's going to take, I think, about 2 days. And again, I can, I'm not just saying that, I'll show you that, but you can go and see for yourself. Two major rips, two major rips, two major rips, two major rips. Pretty good at spotting patterns, right? And things. Here, you get this candle to reclaim the floor, and then you get two major rips, right? And I could even say the same thing for the downside, kind of, right? But I mean, this is pretty consistent. Here, two major rips. Here, two major rips. Here, we could call that 3. You get a pause day in between, but that's good enough for me. Three days. We'll just fucking call it what it is, right? Right here, candle close outside, two major rips. Here, two green candles, two major rips. Picking up what I'm putting down here? That's one major rip. Two major, two major. Man, blowing my own mind right now. Two major rips. See what I'm saying? I want it blowing. What? What are you talking about? I want it. Okay? It's not wrong to want. Yeah. I hope it doesn't take that damn long, dude. Be in the fucking hurt locker. But even at its longest, right? I think this is one of the longer areas. This is 29 bars. Yeah, we would be about almost halfway there. So I want bags, biggity bags. If it doesn't work now, then I'll probably lay off until the candle opens outside. But I mean, again, it's worth the risk to me. So, Dave, typically on a straddle like that, I will try to use the tops and the bottoms, right? So, like, I'll go down to the hourly and I'll basically just make a Like, okay, if that breaks, that's it. Like right here at 214, that's a no-brainer. Whatever the other side is, that's where I would need to see price explode through. Are you relying on the days of contraction to get in near the? And I am, but I'm also relying on how many times you've tapped both sides, right? And in the most recent price action, I'm measuring on a major resistance, like or 1, 2, 1, 2. So either we go hit 3, go tap up, maybe you reject, you come down the third one, then we get our break. But you know that the waves are also speaking to me. The waves, man. Sweet. All right. Yes, that would be a good sign up. Candle close above that. I got to tell you though, you don't like candles, but you got to pay attention to the candles. I don't like candlestick names. I don't want a candlestick telling me what is bullish or what is bearish. When in reality, if we're in range, it doesn't matter what that candle is telling me unless it's leaving it, right? An engulfment candle, okay? And what? You know? So it's like the if that candle is breaking range, okay, then we can talk, you know. Oh, sorry. I misread that. I am a candlestick. Yeah. Yep. All that, all those names. It's like, okay, the candlestick doesn't matter unless it's doing something. Price needs to be doing something and in order for it to be productive. So, all right. Does anybody have any questions on anything that I just went over? Anything at all? Anything you missed out on asking? Is there a setup that gives a high probability for a gap? Typically candles pushing, like we just looked at one. But if you keep bouncing off the same floor and closing, like you do not see sellers, you'll see wicks down as a sellers attempt to drive price down. If buyers keep pushing those candles back up into the box, and you see that repeatedly, it is highly likely it's going to gap up. Somebody just showed me a chart, or I just looked at a chart that had that. Too many charts. I want to ask you how you reframed your mindset this morning on Tesla. Um, this morning. So like, how did I switch from being bearish yesterday to being bullish today? Okay, so that's a really good question. So first of all, I just taught you guys about displacing sellers. And one thing that I was stating yesterday is that, A, we hadn't reached that floor, but B, we did leave pockets of empty space to the upside, right? At least on the higher time frames, that's what I would regard as empty space. Another thing that I have to repeat to myself is that there is no bias until a range is broken. So while I'm in range, I have to be prepared to expect both sides of that trade. So with that being said, looking down here on the 30-minute, right? Or well, we could probably do this on the 15. This morning, I basically had my first warning sign. A foreshore floor that we were able to push off of this box below that we had basically. So look, you can see we could actually see what happens here, right? Overnight, you gap up over a cost basis, you push up to the next one, you pull back, you distinctly mark that as the floor that needs to be grabbed. So here's what I know. Every little bit of empty space wants to get filled, right? I also know, right, and I drew this yesterday, that I got this little channel over here, right? And this is one of the reasons why I was calling for a 305 target, if we could break the floor. Now, I had runners that I was going to leave or that I left on Tesla, and I was expecting that to potentially happen, right? With the empty space we had down to 310.66, it all seemed in play. But every single day that I show up to the charts, I'm able to go and be real with myself and say, well, if we punch over that box at the bell, and not to mention, right? There's other little signs. Like Manny took this with me. That is a little box, right? You pop up, you build a box, you pop down, you reclaim, hold that floor, you move back over the 318.50. You have empty space right here. This is cost basis. That cost basis leads us to another, right, area of consolidation right here. Price is able to pop up to the top of it, hold, and go fill up that empty space. Not only that, it was able to liquidate this box to fill up one last tiny little pocket of empty space it left behind and tap that resistance. So here's what I'm thinking, right? Especially when I'm looking at, and now I'm thinking, okay, well, with that nasty rejection, if we can break down and fill those gaps that we missed out today, there's a fat ass move to 305.50. Quote me on that. But with that being said, every single day, I am looking at what is above and what is below. What could stop me out? So it's not necessarily a switch in mindset, it's a reaction in real time to the plan that I've made in pre market. Because there is always a possibility of a fat retest. The faster you go down, the more likely it is that you're going to go back up. And sometimes it seems on that bounce that it's never going to stop going up, but it will rip up, it will tap structure and draw right back down if it wants. I mean, you saw that on Tesla to the downside. Fast down, you retest up, continue the cycle. Fast down, retest up, fast down, retest up, fast down, retest up, fast down, retest up, punch back. So I have to acknowledge the fact that something that we lost has been regained overnight, likely displacing sellers out of their positions if they're able to break what pre-market marked out. And that's what orb is. I mean, orb is essentially saying that the orders above you in pre-market are going to be filled, and that's going to push price up. And I have to be honest with you, with the downtrend that I drew, at some point, if I knew that if we ripped up and filled that empty space, that was likely going to be a target. I called for 330. Shoot me. I'm sorry. I was off. But it also was in perfect, here's another little example for you guys, perfect confluence with a 15-minute hourly box right here. That is a perfect example of a confluence where this data and that data collide. So I guess what I'm saying is it is an acknowledgement of what is above and what is below. You know, I have to acknowledge that, it is a possibility, especially with an untapped third resistance. And again, with the final icing on the cake, which is you're in range. You can do anything. That there is no promises, and that's really, really tough. That's why trading in range is so tough. But I figured with the setup that I had, it was worth a shot. Now I'm even more convinced because I don't really give a shit where Tesla goes. It's got a Listen, what is Tesla struggling with, everybody? The floor. What is above it? Empty space to that green candle at 340, 360. So if it goes up, cool. I'm going to try to make a bag on that. Now, Sparkly, You asked at some point, I'd love some tips on chart display and managing alerts. For example, you mentioned cascading alerts. Do you set up those to go off every once or every time? Typically once, because it'll draw my attention there. Oh yeah, yeah, that too. There is. I don't care either way. Empty space down or empty space. I just said that in reverse. Empty space down or empty space up. So let's do this in real time, Sparkle, on alerts, because I don't really have anything teaching alerts on this, so I'll take the time to just do that now, because I'm not in a rush. Try to make sure everybody learns. So here's how I would do this. All right. First things first, I'm not going to be able to wait. Ask us. Ask you what? You just want me to ask because you probably already have the answer. Ask where would I put the alerts? Where? No. Oh, don't get. I'm just joking, dude. You gave up, Alex. Don't. No. Man up. Say it. Ask you where to put. Oh, you want me to invite? No. Now he wants to speak. All right, you're up here. Say it with your chest, Alex.
I was just gonna say, I feel like it would be helpful to have
Oh,
us run like where would you enter? What do you see? Like
oh, I
I guess.
well that's yeah. I was gonna do alerts, like how I
Oh,
would
never
set
mind.
alerts to catch this. Yeah, that's something that we'll go over for sure, though.
Okay, cool.
All right, there's two Alexes in the live. We can't have this. It's gonna. There we go. It's gonna disrupt the timeline. Okay. So right now I can't take Tesla because it hasn't triggered on either side. So we're going to figure out where we need to set our alerts on lower time frames to start triggering potential breakdowns. Now I'm going to go to the 15-minute because it's clean. And I like being clean. So fresh and so clean. All right, so I'm going to consolidate all of this up, right? We came back and, oh, well, I guess that's telling me to give it the Wix. Got to do what it tells me to do. All right. So everything I teach you guys that is true on the higher time frame is true on the lower time frame, right? And we can see some of that potential up here. So I'm going to get rid of that box. I'm going to go and draw my box here, right? I'm going to mark out that floor. And I already have my ceiling marked. So here's how I'm going to do this, right? Because I'm going to say this again because it's so fucking important. I can't even see straight. You, hold on. It's so important. I just lost my train of thought. Um, oh, where you enter. If you enter, what what always matters so much to me is where my stop loss is at. And so a stop loss is typically going to be on top of something that you're going to bounce off of. So, for example, if you're in this box and you pop up, right? I decide to take that trade as it closes outside or whatever. My stop loss is going to be on the top of that box. Now, this is the 15-minute time frame, right? And I can see this going both ways. Um, Now, below me, right, I have empty space 318.57. I've got a floor here at 316. I have an unfilled gap at 314. So here's how I'm going to set these alerts. I'm going to set one. I guess I should probably bring that down. So I'm going to set one right here. See right here? On the top of this tiny ass little range, I'm going to set an alert. This is just going to let me know that I'm heading in that general direction, right? Next, I'm going to take the first red candle closed to my left, that's seller's control, and I'm going to set an alert on that. This is going to provide me the opportunity. I would recommend going to the 5. What is that, guys? Do you see it? It's all connected, my friends. Boom. So, honestly, you could probably set an alert right here. This is exactly a fucking cost basis. Everything is connected. So, this is what I would dub a cascading alert. Because what it's doing, see, I got empty space up there. I got a wall that I want to go and hit. Trigger. Okay, I'm watching. Trigger. You should be fucking ready to go already. You're looking for candle close on 323.45. And you're looking for a punchback 5-minute candle close moving through 324.30. These provide stop losses. These provide the correct triggers. Now, of course, this is only half of the play. But you could set good stop losses there. I'm setting an alert on the top. Cascading alerts. Now again, we're aiming for a motherfucking break all the way up in here. So all these alerts, right, are triggering. Hold on, we'll get there soon. What the fuck? Oh shit, I went past. Damn. So I go back over here, right, and we're acknowledging this as our box. I don't really see any need to set an alert here at all, right? Anywhere in here, because this is empty. I expect or need to set an alert on the floor. That's 327.50. Because I expect that if you pop, 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 you're going to go hit this. Now, I'm going to show you guys something. Ready? I'm pretty sure this is going to bleed right into. Oh my God, I'm a bus. Oh God. So if it rips up quickly, just side note here, if it rips up quickly, bam, because it likely would rip quickly through, bam. And so if it rips quickly, this would provide the, right, that's a technical term. And that's where you could look at a potential second high. Now, a characteristic of something that wouldn't reverse would be something that bleeds a little bit more like this. Right? Retest. Pop up. Retest. Build. Move up. Settle. That would be healthy. Is that clear? Pretty cool, too. Look at that. Bam, bam, bam. Pretty cool. All right. So 327 is the first target because of the yeah, absolutely 100%. No, I'm not already in. No, I'm not already in. But yes, that would be the first lower time frame confluential target, which would be incredibly important to have alerts on, right? I do listen, I do see resistance here. I have to acknowledge that for what it is, right? Tons of projections off of 326. And if you see, I'm just thinking regular price, but that would likely be where you would. So if you blow through it, do fast. If you hit it and you pull back and you tap off of what you broke, healthy. And that's usually where people panic, but like that's the actual healthiest. Oh yeah, that's the healthiest way to. I mean, holding the shorts on Tesla, I took it off the low right after that red candle close, and not once did it fucking hit my stop loss. But it, boy, I tell you what, every time it ripped down, trim, pop back up. Shit, I mean, that was so mechanical, you could have just taken rejections. But is there an alert for a candle close? I believe you can actually. once per bar close. So yeah, you can make sure that the alert goes. But I mean, the alert is supposed to bring you to the table. It's supposed to alert you. So if you miss something, it's like the cascading alerts are supposed to tip you off and hopefully bring you to the table because it right to monitor it. Now, if it's kind of grinding real slow like, then yeah, slap more alerts on it and do your thing. And that's kind of how you would want it to get up to this trigger. So, are we making new neural pathways? Wee. Diverging. Cool. My brain is tingling. No way. I just caught a mosquito out of thin air. Or actually, the air is pretty thick. My brain hurts. Tell me about it, brother. How long have we been going? An hour 30, and I haven't even finished the fucking slides. I haven't. I haven't finished the slides yet. We were supposed to do that in the first part, but that's okay. That's how I want these classes to go. You know, and this is the last time I'm doing it like this. This is why I wanted to. I'll do classes, but I'm not. I don't think I'll ever do a whole class like this. It is. I'm gonna take a little break once once we get done, but all right. So you mark the initial entry on a higher time frame, get in on the lower time frame. So there is yes, and listen, this is again something that you need to be able to afford to do. But when lower time frame, because do you remember where I just drew that cost basis and the lower time frame box hit the cost basis and built its own box and they had the same? That's proof enough, right? That what is above is connected below. There is if I can see that 327.50, right? Let's go see what that is. 327.50 is the top of that wick and the middle of this red candle. It's also above all of those, or all above that green candle as well, right? It's not a terribly important level, which is why it's something that when we look at it on the 15-minute, we could acknowledge that if it ripped too fast, it would likely make that second high, right? It's not it's a resistance, but it's not like accomplishing that wouldn't really set me off. However, if we had a candle close at 3:30, right, or 3:29, or we moved through it, and we look at what that represents on the 24-hour, right? 3:30 is right here. Now that might not seem like enough, but just getting a green candle above a candle close, right? It's not the resistance, but that would be enough for me to I mean, imagine, right? Actually, fuck that. Don't imagine. I got you. Imagine with me. Look, right? How do you think that would impact shoving that green candle right up in the face of that? The only resistance you would have left is at 333. Now we could probably look at 333. I mean, that's not a mystery, right? That's just the top on the 2 hour, which would be accomplished if we could punch. So here's what I'm saying. Check this out. That's my resistance at the top of my candles on the 24-hour. How do I get there? What did we stop? How do I get there? You have your answers. It's right here in front of you. You need a candle close on 327. Hold on. 327? That sounds really familiar. Doesn't it? I think that might have been the confluential target that we just talked about through that empty space. Remember? 327. So that actually would have kind of an impact on the 2 hour, which we still need more to get the 24-hour one, but it's a good start. So, yeah. And then a punch back over that. And what I was getting to is that if that's the top of our 24-hour candles, then the punchback that we set ourselves up for above us would give us a new high. And if the high is promised outside of the box, start aiming. Asking, how do I get there? There you go. Yeah, experiment with that. I get the boxes, sellers and buyers, but sometimes you mention what is above and what is below, and you mark the floor slightly outside of the box above and below. Is that just resistance? I normally use just the ceiling and floor of boxes. Can you recap on it again briefly why you do that instead of using those boxes? Hold on. But sometimes you mention what is above and what is below, and you mark the floor slightly outside of the boxes. You might be talking about the imbalance, perhaps, if it's an empty space. Is that possibly what you're referring to? If not, it might be. So a lot of the times I'll mark out a wick. 330. 332.80. Oh, this one. Oh, I'm just sorry. I mean that's I'm not being super accurate. Don't forgive me. That's my fault. That's right. That's where it's 332.50, right? The wicks. There are wicks coming off the, well, not necessarily. You have two wicks off the same mark. So that's my fault. Say I mean it's in the right area, but you are correct, and I apologize. That's my fault. I know. I got to be better about that, especially with you guys learning from me. So, oh, Lori, I just saw your text. I really appreciate that. Thanks. I really do appreciate that a lot, though. All right. All right. Let's see. Had I missed anything else? Right. Are we cool on that though? All right. Did I miss anything? Oh, Potter, how the fuck do you get that toolbox back in Trading View? How'd you delete it? How do you even do that? It's probably hiding in somewhere on your screen, like up here or some shit. It's actually a perfect place for it. The star on the bottom left. Oh yeah, yeah, yeah. Yeah, that's right. I don't think I ever turn that off. There's a couple different tools that you guys can use, that they do offer. There's you can lock your drawings so that way nothing can fuck with them. Uh I believe, what is this one? Yeah, this gets rid of them really quickly. So if you need to see some clarity, magnet mode, which can be really fucking irritating, is if you struggle with like points of contact. Look, see how it's like fidgeting? It's trying to find the exact price that I'm pointing out. So like I have to put it on the actual day, but that'll allow me, like, see right there, bam. It's a little fidgety, but it can help for those of you guys. Which trading view should we use for alerts for beginners? Essential only gives you 20. Yeah, the magnets are not my favorite. I mean, they're kind of cool, but they fuck you up a little bit. Look at that measurement tool. Why didn't I use that before? Huh. Um. Anyway, I think you're probably gonna need more than 20 alerts. So maybe the next level up. Yeah. Yeah, I've seen that light. They're strong and light magnet. That's right. Snap to indicators. That's wild. Give a dog a bone. Yeah, Black Friday is the best time to get Trading View. All right. Well, let's go ahead and I mean, the last thing that I wanted to cover with you guys was just kind of a brief recap. Or, again, I haven't officially defined it in this course, so we'll finish up with this. Um, and again, we might be backtracking here, but that's okay. Uh, but what we and look, there's that Tesla chart I was just showing you guys. Um, so putting everything together, the consolidation, the expansion, the empty space, the idea, or the what I would say I created, because a lot of the tools I use, other people, I'm just using them differently in a different capacity. But the box itself, right, was an observation made from, I mean, I could say thousands of charts on, even as far as like the most low liquid bullshit to something robotic like Ford. The boxes, that was an observation, right? Where at first it was like, oh, you're hitting this 50% mark. And then as I go through the charts, I'm seeing that, well, if that's where the majority of the volume is at inside of that box, then that's the price moving through it is typically, or must be, where they're pushing that volume and using that volume to continue moving forward. And that's when I was able to start saying that once a 50% mark, and this is what the Potter box punch back, punch down is that if you break candle close through the 50% mark, you are promised a new high. Now, this is where it gets people, because some people are so eager and they're like, well, I see, this and that. You have to actually go look, what is your next resistance? In this case, it was this wick on Tesla, right? And so the first resistance literally is, even if that means it's just a dollar outside of that box you just punched through, it's promising you a new high to the next resistance. And so this is the theory that I use, especially after bear markets, right? Now, this works all the time. It works especially if you build a box in a bull market, but I really love it. And this is actually a good example of that, is Tesla coming out of a short-term bear market. And what that provided was all of those boxes that you just flushed and left behind, those became the targets and the structure that I gravitated towards as far as taking entries. And this, but as far as even retest on lower time frames, provide that or will provide this opportunity, right? Um, so punchback, when successfully crosses through the 50% of an area of consolidation, is closed above or below, giving the signal for new highs or new lows in regards to the box. So working through a couple of examples, and these are all from different lower or different time frames. And again, it could be bear market, it could be bull market. I particularly love when the bear market is over, because it's so easy, right? In a bull market, there's a lot of this, right? Where you build a box and then you end up losing it, and then you end up punching right through it. And that's fine, right? My strategy worked so well on futures, dude. I made too much money. I'm not going to go through this right now, but I could just trade futures looking at just little pockets of empty space. That's it. Just that alone is like just the pockets and the structure. Trend is, yeah, whatever. But So this is Apple. I believe this was on the lower. This is like the 5 or the 10 minute time frame. But here's an actual really good example of a micro view into what, like how even when you're on the 5 or the 15, sometimes you could, and this is not something I recommend on a daily basis, but you can see, right, small triggers to let you know that that is going to be lost. And so in this example for Apple, Apple has your 2, 1, 2, 3, leave, build a area of consolidation right on top of the box. Now, every box is true, right? So if this box is, or we leave and we go and we hit something and price moves back down. Now this is again a lower time frame setup, beautiful empty space underneath it. And this is by far, if it's not the 1, 2, 3 first, and you only have 2 on the bottom and then you dump, because this is what you're looking at right here with the blue line is a representation of a setup that I take every time I see it. Day trade, scalp, doesn't matter. If it's it did this happened 2 days ago? Alex, right? Is this not a yeah, perfect example of, well, besides the fact that it goes up first. But that is to a T. I'll take that every time. But in this example, I'm able to see that there is a box, right, on top right here. And so by punching through even that small box here, it promises me a new low. You should have bounced off of it. Punching through that promises me a new low. Not to mention, if that's promising me a new low, and that box's floor is the top of this box, then the new low is cost basis. And cost basis is closed thoroughly through, and we flush for a successful lower time frame punchback. Let's see if we can find that on the chart. It was Q's, I believe. Shit, this is actually a pretty good representation. Only difference is there's no third, right? You have 1, 2, 1, 2, struggle, right? And then you end up getting a candle close up against the floor, empty space underneath, target right there, and you end up flushing really strong. Um,
Oh,
oh, what just happened? Oh, look at that. Boing. Yeah, well, there's different alerts or different sounds for the alerts. I personally prefer. Where'd it go? There we go. Mm-hmm. All right. Anyway, yeah, actually, you can see this quite a bit. I'm seeing several areas where same thing, right? Box, fall. That happened in after hours. Box, empty space, fall. I can't remember exactly where that was, but same thing, right? Is we're looking for that 1, 2, 3 or 1, 2, 3 rotation. And in these cases, it's just boxes losing their floors. It's not necessarily punch downs or punch ups, which you're creating the environment to actually punch through a lot of these things if we ended up going through all-time highs. These would be lower time frame triggers that would hopefully give you the trigger for the higher time frame. Officially, this one being the one for exit, which is 530, 550. I don't know about Friday. I was gonna ask everybody in here if they want to take the week, review, go watch all the videos back, write down more questions, and then we can start on Sunday or on Monday, or Saturday. We can start up again. I'm leaving that up to you guys. So I think getting it really make these recordings fire if you guys take some time through the long weekend to write down all of your questions, go through these classes, watch them again, write down all of your notes, and then we'll start fresh on Monday and finish up the classes. We'll start with option contracts and stuff like that. But you guys like that Monday? Cool. And then please, 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 please write down your questions. So cool. Right. So let's. Oh, actually, I found it. There it is. This is where we had that 1, 2, 3. Absolutely. Now it did not have all the empty space until it got in here, but I believe, yeah, that was yesterday. 1, 2, 3, 1, 2. Yeah, that was it. But you could go through the chart and see that same dynamic. So it's good shit, especially when you have empty space underneath you. Lovely. All right. Going back. Finish this up really quick. So Carvana right here again in a bull market, and one could argue that there's a box now even there. Doesn't really change, right? The floor would be your cost basis, but regardless, that's a beautiful example of pulling back, retesting, and then in one candle in this example, you end up punching, through that box. But that's actually a lot of the times, especially after a big run, if you're going to see continuation, you're typically going to see that whip down. It's going to happen. One of the characteristics of a healthy retest is quick movement down, right? Because we want to create empty space that we can bounce back up off of. Cost basis is also where, and this is where you can look at what's above and what's below. We can see that there's a cost basis above us here, and we can see that there is it looks like, yeah, a punch back here. So we actually end up popping down too fast, hitting the floor of this box over here to our left. And this is one of and I think I remember setting this example in there because I wanted to show an example of there are A, abiding by your stop loss, but B, there are lower volume, and I believe this is yeah, this is U. It is lower volume, meaning that everything that it does is going to be in slow motions. That means that even your punchbacks can mean, and not really in one candle, you get a candle closes out there, but it immediately falls. I think that was pre-market, but every single candle closes underneath. Even the one that whips up hits cost basis, and then finally we get an open candle underneath cost basis, hit the floor, go green, gap down, try to gap fill, and then you end up dumping. Now, I prefer shit that moves like this and like this over shit that looks like that. Kind of an example of why I stay away from lower volume stuff. Hank, is your profile picture 2 plums? That's pretty good. That's pretty fire. I like that. That's a good callback. Yeah, that's comedy right there. I'm glad I could inspire you with plums. If I had anything to do with that. Or you could just be a fan of plums. I'm actually allergic to them. All right. Now, this is a play-by-play, right, of said box building, right, and box punching. So right here we are bouncing, and by closing that candle here, we are creating our top, right? That's where sellers control the price. Price expands up. I think that, yeah, there was a floor right around here. We ended up going and wicking that. And again, candle closure secures that top box. So at this moment, right, we see that there's a box below and a box above. Okay. Sorry about that. That was my alert. Sorry. That was the zesty alert, dude. I got nervous, thought I left a tab up or something. No, I was playing. Oh, Lord, man, mercy took me by surprise. Hope none of you guys are in public right now. God damn. Anyway. Oh my God. You can get free comedy in this class too, I guess. All right, so what I was saying, did it really? That's crazy. So we have this area of consolidation. At this point, we see the one, two, well, you have 1, 2, 3, 4 candles off the top, but you have 2 major rejections. And this is on a 15-minute time frame, mind you. But as price moves down, and this is, again, a lot of the times we're, as day traders, we're utilizing this stuff. Price falls down, right? This is exactly what I teach you guys on higher time frames. Candle closure. Now look over here what happens. Candle pop up, can't reclaim. Candle pop up, can't reclaim. Candle open up, and you immediately flush. 50% mark is broken, and you see a new low. Wife doesn't believe I'm in class now. That's too funny. Now, I think at this point, the majority of you guys understand, right, what the punchback is. I've gone over it 100 times. But just especially if you go and you back test, looking at boxes with replay mode, that can be a really useful exercise to watch the construction of boxes and where it happens. Boxes usually are built when they run up to a resistance that they need to break. They build up the supplies. They a lot of the times will pull back, and that's what we're going to look at here. So we move up, and again, I pointed this out, impulsive trader. Candle close is really, really important, especially those of you guys who are, whether you're holding or you're looking to get in. A lot of the times for day traders, for scalpers, letting that structure build on lower time frames when momentum and volatility is present will allow you to gain greater insight on what the chart is building in order for you to make a better decision. So typically I like a candle close outside at the top of a red candle, right? But I know that in this case, Microsoft had hit the 330 resistance. Now that's a psychological number, but not only that, it was a wall as well, right? Price is unable, after multiple tears at price, right, to move higher and grab that floor. So price retraces back down to what it broke out from. How does it do it? In one candle. As you move forward and you hold, typically you want to see price retrace back up to test the floor. And in this case, it retests cost basis. Now, what and who is at cost basis? Sellers and buyers, but sellers turn into buyers. So the sellers can be both. They're trans-financial. They can be whatever they need to be, but as far as when price moves through them, they're buyers. You turn them into buyers. When price hits cost basis, you are supposed to push price down. If you are unable to see price retrace, now in the example that we see here, they do. See the wick? It comes down after that candle. They try to bring it lower. It bounces and it moves straight up to close flat against cost basis, providing a signal for the next new high. Now this is lower time frame shit, so not everybody's good. But this even no, you know what? No, it's not, because the fact of the matter is the same shit happens on the 4 hour, on the 24 hour, on the weekly, for God's sakes. So punchback? No, that is not a punchback, Philo. That was something that punched down and now is reclaimed the floor that it lost. And so that red candle where you gap down, that'll be your first target. The open price of that red candle, if you can close above it, that would be where you would look for the potential gap fill. But I would look at the structure over to your left too. But yeah, that's Carvana. All right. So again, I know we've already gone through this a lot, but we'll really quickly brush through some examples here, and then we'll go ahead and call it. Let's do some old classics. Actually, let me see if I can. Yeah, I can. I can find this. Let's check this out. It's a really, really interesting setup on this. Yeah, I remember this like it was fucking yesterday, dude. So first of all, right now, typically I'm not one to give the box that floor, but in this case, I have to label the whole range. So we get, and it doesn't become relevant because realistically it's 1, 2, 3 off the top, and not a single seller is able to push you down, but there's a reason why. We had a really high tension box, and this is something that I could expect out of snow, right? And this is where you get that concept of a new high. You can't see it, but there is structure in here. We'll explore that on the 2 hour. See that starting to form? You can start to see that there's obviously something up there. I didn't even look when I just did that, by the way. You get a punchback, excuse me, through the 50% mark of a box after filling a gap on your floor. How do you do it? How did you get there? Fucking fast. So if you hit a floor and you don't close underneath it or pass it, then there's a good chance that you're not going to. There's a good chance you're going to bounce. You bounce, the candle closes green up against the floor. This already provides us with the acknowledgement that sellers are not stepping up where they need to, and price expands up to the 50% mark. It closes there. It closes on top of cost basis. This provides the gap up. The gap up, unfortunately, was not outside of that wall here, right? It was just underneath. Price expands up, hits what I'm determining. I'm assuming that's called. We'll go look, but that is a range regardless. Goes and hits the middle of that range. This is 190, 150, and then because you gapped up and you could not grab onto a floor, this is you got to pay attention to this stuff, especially when you have, like, a lot of people get really eager or they hold through this type of stuff. But like at some point, right? Yes, if you're long term, you could have held through some of this. But this is where if you planned on taking that trade, right? Maybe up to 187.50, you left some runners, they go hit 191, you trim out again. At that point, when you fall back underneath here, right? That's a get out. Now, not being able to hold onto a floor is one thing, but not being able to hang onto your ceiling is another. And so that tipped you off that you're likely going to pull back. We see that pullback, and of course, consolidation happens as buyers hold. They allow price to move back into that equilibrium, whatever, the medium, move to the 50% mark, bounce back up, and yes, if you were zooming in because every motherfucking thing is connected, that is a box. I'm not going to zoom in again because I'm finding the hourly chart, but that is a box, and that is cost basis, and you fucking hit it. You hit it too fast, price comes back down to retrace. You get your 1, 2, 3. Sellers don't step up and push you under anything, and that tension breaks. Now, that's a really meaty ass punch, but now I want to show you guys on the weekly. Isn't it here? Yeah. This was also, I was joking around because I remember when Tesla, sometimes being defiant is good. I remember when we were here, everybody was talking about Tesla had a cup and handle and that it was going to reverse. And I think I just like out of spite was like, I'm looking for the downside now. But this is a good example and a great example of gapping down, right? Punch down is due to not overcoming the ceiling or yes, right. All right, so you're saying in Philo's example that you don't get in until you see the next candle. No, I would have assumed you've already used something on a lower time frame or the previous top of that box that you punched down through as an entry. I would hope. Especially when you reclaimed the floor today. Well, I also just like I dislike the patterns should have never blown up the way that they did, but they're the easiest thing for people to sell. Now, there is a guy who guy had to have autism, but he went through it's like chartpatterns.com or some shit like that, some simple website. And it goes through and shows you the statistical percentage from back testing over years, every single pattern from identifying it. So it's like I I already am like kind of have a disposition against that. So when I hear people saying, "Oh, it's going to go up because it has a cup and handle," it's like that's not a good reason. So, while we're learning here, while we're looking, right? We'll remember some of the lessons that we've had before, like 3 rejections off of the top, 1, 2, 3, candle close under the floor, gap downs, right? We had a gap down underneath the top of that box, and that leads you for a weekly candle close, which then gives you a new low, which seems like it's over here, but then you bounce and you retest because that's healthy price action even on the weekly. Do y'all see that? The same thing I just showed you on that lower time frame. Bloop, bloop, bloop. Same thing. Bloop, bam, retest. 2 fucking 4 weeks just for it to retest before you continue moving down. 4 weeks until you continue moving down. Fucking 4 weeks until you rip. Damn. 4 weeks. 5 weeks. 4 weeks. Mini weeks. Oh, dude. Hell yeah, that didn't work. All right. Anybody else have any questions on anything we covered tonight or in the previous classes? I know I've already asked, but just want to make sure. Otherwise, we'll go ahead and stop the recording and set you guys loose until Monday. So that's Thursday, Friday, Saturday, Sunday. You got 4 days of breathing, um, and 4 days to start going through all of this material, writing down your notes. If you want to run the shit through AI, run the shit through AI, but you got to send me the transcripts. Take your notes. I mean, yeah, take your notes, write down your questions, and we'll go through them next week. So many typing. Scared. Yeah, I still use TradeStation. Whoever asked that. I did back test. There you go. Thank you, Potter has sleep deprived Ivy. Did I say breeding? You know what? That's crazy that you heard that, AB, because I kind of thought about that after I said it. I was saying breathing, but whatever. Yeah, of course, guys. Sorry, I have a little bit of a lisp. Yeah, that's because it doesn't include all that data SR. Oh my God, AB. That's going down in history, dude. It's over with. Your kids could be watching this, 18, 20 years, man. Say hi. Oh, yeah, we're recording. Yep. All right, guys. Have a good night. Hey. Good night, guys. You guys have a wonderful night. We'll see you guys tomorrow.